So good morning and welcome. My name is Teresa Campbell, and you have joined today's PIM and PIA Mid-America Financial Executives Council presentation on what's ahead for print in 2026 and beyond. Note that all of our attendees are placed in mute mode so we can ensure a quality recording, which will be provided to our members by the end of the week. We encourage you to add comments or questions during the program, and you can type those in the Q&A field or the chat field at the bottom of your screen. And then we may hold them to be asked at the most appropriate time. If we know that the answer is coming on a later slide, we may hold it till later or until the end, but we will get all of them answered. Now, the Financial Executives Council is coordinated by leaders in both the North Central and South Central regions of the U.S. They guide the programs on content offered 6 times a year and focus on financial reporting and compliance, data management and security, and financial policies and planning. Our council co-chairs are Carl Nathy with Myers Printing, Ryan Wagner with Action Mailing and Printing, Matt Wills with L.B. Carlson, and Ken Rain with Wallace Carlson Printing. Ken, we're going to ask you to introduce our presenter.
Awesome. Thank you, Teresa. It is my pleasure to introduce Richard Romano today, our guest speaker. Richard is the managing editor of What They Think, the leading news and information portal for the graphic arts industry. He oversees What They Think's data analyst section. He's tracking printing shipments, employment, and other industry metrics. He also conducts and writes What They Think's annual print outlook survey and corresponding report. And stay tuned at the end of the presentation. He'll expand on that a little more. And he's also the author and co-author about a half a dozen books on the printing industry. So with that, I'd like to turn it over to Richard to give us his presentation. Thank you.
All right. Thank you, Ken. And thanks to PIM and PIA Mid-America for inviting me back this year. I seem to remember doing this last year, and it was a lot of fun. I hope you guys got something out of it. I gave my statistician joke last year, and it never seems to go over very well. So I'm going to skip that this year and just dive right into the presentation. Every time we conduct our survey, we sort of ask open-ended questions. How's business been over the past couple of years? And some of our write-in comments in the most recent survey were, since this year has been a monster for growth, we look for more sustainable growth next year. But the flip side of that is the top line is up, but wages, benefits, utilities, and other overhead items continue to increase significantly and creates downward pressure on the bottom line. So a mix of good news and bad news for 2024 going into 2025. But yet another of our respondents said, all indicators show paper is not going away. And when you use all caps, you know it's serious. So print as a medium is robust and it's certainly come back. But as we'll see, that print can mean a variety of different things these days. We're going to look at business conditions, and then we'll look at some of the opportunities and challenges and investments in the industry. The story so far, in case you've sat out the last few years, and one could hardly blame you, the printing industry had an outstanding 2019, and we started 2020 with the best January in almost a decade. But then, as we all may recall, the Ides of March hit in March 2020, and the pandemic pretty much shut everything down. We had a fairly quick rebound throughout the second half of 2020 and going into 2021. In 2021, we were practically back to normal. There were some virus variants that were causing some surges, but it was largely over by summer. And we began 2022 with 3 challenges becoming and continuing to be fairly acute for the industry. Those are the infamous supply chain disruptions and the various consumable shortages. People had a hard time getting paper, for example. The perennial challenge of finding and keeping employees, which has persisted, and inflation and cost increases, which we thought had resolved themselves by the end of last year or the year before, and seems to be creeping back. But we'll see that later in this presentation. And in 2022, it was virus. What virus? Was there a virus? While the infamous supply chain challenges continued to persist, obtaining papers, certain types of vinyl, aluminum, and other materials and consumables was a challenge, and things were a lot more expensive. But by the 2023, 2024, we sort of returned back to normal, or what we can probably consider the new normal. But as 2025 begins, a new set of challenges emerges. So what I'm going to present to you here is from our 2024 Fall Business Outlook Survey. This was in the field from October to December 2024. And there's a danger in doing these kinds of presentations at this point of the year. The data might be a little bit almost past its sell-by date, but I think there are a lot of things a lot of conclusions we can draw from what we saw about this time last year. If we look at how print businesses reported revenues compared to 2023, we based this calculation and we calculated that we saw a 2.0% increase in revenues from 2023 to 2024. But as my mentor, Dr. Joe Webb, always advised, you've got to adjust things for inflation. So I backed out 2.7%, which is what the inflation rate was as of September 1st. So technically, print businesses saw a minus 0.7 decrease in revenues from 2023 to 2024. So unless you adjust for inflation, you really don't quite know just how exactly you're doing. How do they expect revenues to be this year? Well, they expect revenues to increase by 5.4% on average. And if you back inflation out, that's about a 2.7% growth in revenues this year. So we'll see in our next survey how close to the mark they were. In terms of jobs and orders, print businesses reported a 2.1% increase in jobs from 2023 to 2024. Fortunately, we don't have to adjust jobs for inflation, although sometimes it can feel that way. So that was a pretty significant increase from year to year. And they're expecting an increase of 4.6% this year over last year. So still expecting reasonably healthy growth in jobs and orders. In terms of profitability, print businesses reported a 2.4% increase in profits from 2023 to 2024. And adjust for inflation, that's a 3.3% decrease in profits. So profitability has always been a tricky thing, as we saw in the opening quote from one of the writing comments. It depends. It doesn't matter how well you're doing. If your costs keep increasing, that always eats into your profitability. And in terms of how they expect profitability for 2025, they are expecting a 4.3% increase in profits this year compared to last year. So people are still expecting this year is going to be a reasonably good one. We calculate our business conditions index based on revenues. And this is sort of like one of those Monty Python charts where the sales go up and down the wall onto the floor. So it's been a rough 10 years for the industry in terms of revenues. But hopefully this year we'll see things kind of stabilized to some extent. All right, so what are print businesses' big challenges, and where do they see their business opportunities? Now, this is, as I mentioned, this survey was conducted in fall 2024 when the economy was doing really, really well. So why national economic conditions should be a big concern. But then again, that always tends to be a big concern regardless of what the economy is doing. So I'm not quite sure how to interpret that. But of course, increasing plant productivity is a perennial challenge. Getting more out of less is certainly on print business owners' minds. And of note in this slide is managing workflow automation at 37%. This is the highest this challenge has been since we've been conducting these surveys in the last 10 years, which indicates that people are really starting to take automation seriously and realizing that they have to really think about it a lot more seriously than they used to. I used to say that automation is like the weather. People always talk about it, but they never do anything about it. But it seems like automation is really now on their radars and figuring out how to make that work for them and use it to increase plant productivity is something they really need to start thinking about. In terms of new business opportunities, again, improving economic conditions. Not sure that's really an opportunity per se. It's just one of those, rising tide lifts all boats kind of things. But that's where their minds, their headspaces are at. Customers outsourcing more work to us. The boilerplate explanation for that is that printers like to think that there are businesses out there who do a lot of their own printing using their own internal devices, and if only they could convince them that they can get better quality or be a lot more efficient if they just outsource that stuff to them, it would work out better for both sides. So that's sort of where their thinking is. Acquiring another company is the highest it's ever been in a while, so people are sort of in M&A mode. And of course, automating production with software is also at a high point if compared to past surveys. So again, automation is really starting to appear on people's radars. We just started adding, diversifying print product application offerings, and it's at 19%. And as we'll see, that's going to be a major theme going forward, is that print businesses are looking for ways to diversify what it is that they're offering their clients. In terms of what they're investing in, and so some of those application areas that they're diversifying into, as usual, most of our respondents say they have no planned investments or official planned investments. Uh, Finishing and binding equipment for digital production, that's been a perennial number one for the past 5 years at least. Interestingly, additional space, new location is the number two investment. That's the highest that's been in quite some time. And it was always in single digits, so we never really thought to ask, are they looking to get more space or are they looking to downsize? So we'll be tweaking that question in the next survey. And of course, workflow automation software. This is also at a high point. So again, automation really starting to be taken seriously by the industry. In terms of the application areas that they're looking to expand into, 10% said they plan to add in the next 18 to 24 months high-speed production inkjet, like the PageWide or the Canon ProStream. As those devices sort of diversify themselves, and there are a lot more units, a lot more entry-level units, they're looking to see how they can leverage inkjet production and do more things with them. Digital label printing, that's an interesting area that they're looking to get into. As well as things like specialty or industrial printing. Those are the things you can do on a UV printer, like coffee mugs, golf balls, smartphone cases, that kind of thing. Those are the promotional items that can be a valuable application area for businesses to get in. And things like digital enhancement, and I'll talk more about digital enhancements later. And then folding carton printing and converting is another area that they're sort of looking at. What are print businesses' hiring plans? Well, 57% said that they are looking to hire in the next 12 months, in other words, in 2025. And the positions they're looking for are primarily outside sales reps, some production employees. And it's interesting that every other year these things tend to swap. So 1 year, production employees will be the most sought after, and the next year, sort of more sales will be the most sought after employees. For the moment, it's a mix of primarily sales reps and then some production employees. But as they're looking to replace more production employees with automation, they're probably going to be looking for less and less actual production employees. We asked a special question about digital embellishments in our most recent survey, and we're really bullish on print embellishments. We've been working closely with a company called Tactiful, founded by Kevin Abergel, and we conducted our own embellishment survey 2 years ago, and then we conducted a follow-up survey at the beginning of this year. And some of these questions we duplicated from survey to survey, but currently about 3/4 of the industry don't use any kind of digital embellishments like Scodix or specialty toners or any of those items. And there's a lot of great potential there for businesses to really take advantage of embellishments to sort of improve their print applications and boost productivity. And so the tactile nature of print, it seems like we're sort of going into sort of a tactile revolution where everyone's talking about tactile direct mail. And there was a study conducted earlier this year that found that embellishments on packaging can actually improve the sales of those items when it's on the shelf next to something that isn't embellished. So I think there's a lot of potential in digital embellishments to really sort of help the industry and help the industry's clients.
So a couple of questions there, Richard, before you move on. The first is, we have some traditional post-press suppliers in the industry that have offered a lot of those services. Do you see most of them expanding into digital embellishments, or do you see it mostly on the commercial side?
I'd like to see both actually, but I think mostly it's going to be on the commercial side because I think just in general, and I hate to say this to people who specialize in finishing and post-production facilities, but I think a lot more commercial printers are insourcing this stuff just because it's just a lot more efficient to do stuff in-house rather than outsource, and that just seems to be the way things are going. So I think there's certainly opportunities for both to get into embellishments, but I think it's going to be largely on the commercial side. But there is a space for the post-production houses to offer it, so that the commercial printers can at least experiment with it and see what the response is from clients before they go ahead and insource it. So I think that's where a lot of the momentum is going to be.
And then one question back to hiring needs. Is there
Yes.
an untapped pool that you're aware of as we're having shrinking pools of qualified candidates?
It depends where you're looking, because another question that we used to ask in previous surveys, but we didn't ask in this one, is where specifically you're looking for employees. And most of them just seem to be using things like monster.com, if that exists anymore, or Indeed, or just some of the general employment sites, rather than approaching some of the graphic arts programs like Cal Poly or Clemson, or even going to the Print and Graphic Scholarship Foundation, which is doing a lot to try to sort of help students and printers sort of get hooked up. So I think it really depends where you're looking for talent. You know, looking for people in all the wrong places. So I think there are a lot of good resources out there to find the people who are specifically in the industry, looking to get jobs in the industry. I just need to know where to find them.
Have you seen printers with training programs doing their own training, or what are your thoughts on training?
I think they mostly just do training as they need to when they're onboarding employees, but I haven't really seen anything in terms of just official training programs.
Okay, so just in-house.
Yeah.
Okay,
All right.
terrific.
Moving on. So we asked what the primary barrier to offering those digital embellishments is, and the primary barrier for almost half of respondents was, well, no demand from customers. And well, okay, fair point. Cost of the equipment is up there as well. There were all sorts of other weird barriers. Some are just, they just have some innate distrust of it or dislike for adding embellishments. But certainly, as more customers become familiar with embellishments, hopefully that slice of the pie will shrink. For those who who have added digital embellishments, what was the main reason? Generate more profit is the number one response there. Client demand was selected by 12%. Don't know is 33%. So sometimes people just invest in things and don't really quite know why. In our the study that did with Tactiful, a lot of the respondents said that, well, basically gut instinct was sort of why they did it. Some people go by gut instinct rather than sort of have a big master plan for adding these sorts of things. And are digital embellishment jobs more profitable than your typical CMYK jobs? Respondents tend not to know because they tend not to measure those kinds of things. But then again, 30% of respondents said, well, sometimes they are. 10% said they always are. And 22% said never or rarely. So those who are doing them I'm seeing, they definitely tend to be a little bit more profitable than normal CMYK jobs. 2 years ago, we asked about automation and AI. We're definitely going to be updating these questions going forward in the next survey. In 2023, this is fall 2023, we asked about automation, and we asked, have you implemented workflow automation? And 62% said yes. And we asked, well, what is the nature of that automation? And the majority, 66%, said it was software-based estimating. So that's where they see automation. And 60% selected software-based automatic processing of prepress files, which is usually what we think of when we think of automation. Only 11% selected robotics, and I'll be talking a little bit more about robotics at the end of this presentation. There was some interesting data from Keypoint that we reported on recently. And of course, 52% considered automation to be a web-to-print or online storefront, which is certainly a big part of automation. In terms of AI, as I like to refer to it, that's sort of the topic du jour. And we asked, what's your approach to AI, and when do you feel you're going to start using it, and what are you going to be using it for? 25% said that in 2024 or 2025 they'll be using it for production analytics, which is kind of the killer app for AI at this time. 25% are using it for estimating. And of course, most of them are using it now for graphic design, layout, creative services. And I usually follow the wide format and signage market, and certainly a lot of sign shops are using AI just for design help, not necessarily to replace anybody or get rid of designers, but sort of help them become a lot more efficient. You can type in some prompts into a thing like ChatGPT, and it'll give you some image ideas, so you can sort of work from there and sort of get inspiration. I think it's kind of like where Adobe Illustrator and Photoshop were in 1989, 1990, where there was a lot of people looking askance at, software for design. Will that put people out of work? Well, no, it just made them a lot more efficient and gave them a new set of tools to work with. So we'll see how AI shakes out. It could also be the death of us all. You never quite know, the way some people are talking about AI. So pulling back a little bit and looking at some industry data that we get from the government. If you look at from County Business Patterns, which is a publication of the Bureau of the Census, you can see that the number of printing and support activities establishments has been declining over at least the last 10 years, 12 years. Now, this is where I get into a little explanation that can be a little inside baseball, which is that so you've got the North American Industrial Classification System, the NAICS. Yes.
Go ahead, and it will you may answer it before we get there.
Okay. So we're talking about NAICS 323, which is the most broad category for printing and related activities, pre-press and post-press companies. And that is determined by what they identify themselves as, which is a manufacturing category. Now, those print businesses that have listened to us pundit types over the last 10 years and have become marketing services providers or in some other area, they may identify themselves in some other NAICS, like a 541 NAICS, which is more of a service NAICS. And I did a survey, I went to Dun and Bradstreet a couple of years ago and just did a search of all the companies that I've written about or profiled. And most of them were in 323, but a good chunk of them were in some of the service categories. Some of them were in categories that I never would have thought of, like telecommunications. So it really depends how they consider themselves. So the big challenge we have in trying to come up with industry demographics is where do we find people who do printing? And that remains our challenge, and I still haven't cracked that nut. But it's something that we're conscious of. So when we see things like this chart, it may not be entirely reflective of how healthy the industry actually is. It gives the impression that things are declining, but that may not be the case at all. It could be growing in other areas. We just need to find out where those areas are. So hopefully that answered somebody's question.
Yep. And so for the most part, you're looking at general commercial printing, but you may have somebody that builds online storefronts that would relate to our industry, but they may be categorizing themselves in a service
Exactly.
industry.
Yeah. Software
Certainly,
category or
right. Paper manufacturers are not a part of this, even though they're very much a part of our industry. Paper would be separate.
yeah, that's a separate NAICS. Yep.
Yep. Envelope manufacturing, many of them would see themselves as separate, and that's another industry. And so there's a lot of gray areas potentially on what we call.
Yeah, and if you go to the print stats section of the What They Think website, I mean, we break all these things down by different NAICS, converted paperboard manufacturing and all those different, paper manufacturing and paper converting and stationery converting. Just for the purposes of this presentation, I don't want to spend 5 years going over every single category. But if you go to the print stats site on What They Think, you can find a lot of data pertaining to all those different segments.
Terrific. Thank you.
We also track monthly commercial printing shipments, the value of commercial printing shipments. This is essentially revenues. You can see the thick blue line there at the bottom. Had kind of it's not been, we started off with kind of a roller coaster year with shipments. February was the most dismal month in printing history, or at least since anybody has been tracking these data. Had a pretty good March, but we're still just about even with 2024. So hopefully we can pull ahead in the next couple of months. This is where we stand at mid-year, January to June shipments 2024 compared to 2025. And you can see that we're about $1 billion below where we were last year at this time. So hopefully we can make up some time as we head through the last half of the year. Profits are kind of a mixed bag. And we tend to break printing industry profits down by asset class. Those with less than 50 million in assets and those with greater than $50 million in assets. And this is what we usually call our tale of two cities, where smaller companies tend to be doing a little bit better in terms of profits than larger companies, since they don't have too many sunk costs and they can pivot more quickly to other kinds of applications. They're not sort of locked into any particular kind of printing the way a lot of the big facilities can be. There was an interesting article that came out from Keypoint Intelligence. If you go onto What They Think in our data analysis section, they wrote about how where small and mid-sized businesses is a lot where all the action is in terms of people investing and diversifying and doing new things with print. So be sure to track that story down. Some interesting data there from Keypoint. Pulling back and looking at the macroeconomic landscape, GDP growth has been fairly solid. throughout this period, certainly since the pandemic. Um, in terms of 2025, we had a really bad first quarter, but then we rebounded to 3.3% growth in the second quarter. And the GDP now and some of the other central banks are looking at about 3.0% growth in GDP for Q3. So we'll see how that shakes out. So GDP growth has still been on a pretty good roll. Where we're starting to see things start to turn south, the unemployment rate ticked up from 4.2 to 4.3% in August. So the job market is starting to get a little soft. For the labor force participation rate, is still fairly healthy, although that's declining a little bit. Although it's kind of spiked in the last a month, but it's still fairly high for what we call the prime age workers, 25 to 54-year-olds. Because one of the things that affects the labor force participation rate on a whole is a lot of retirements as the boomers continue to retire, and other people sort of exit the workforce for one reason or another. But it still is fairly robust for those of prime age employment. And of course, everybody's favorite topic, inflation. We've been seeing that tick up over the last couple of months. We're now at 2.7%. I think it was at 2.8%. This doesn't include the most recent inflation report that came out last week, I think. So inflation is starting to tick up as the tariffs start to kick in. All right, so what are some of the prevailing trends? Well, in terms of the economy is still doing pretty well. Some cracks are starting to appear. GDP is still rising. The second quarter offset a particularly bad first quarter. So Q3 is looking to be fairly robust. Unemployment is still generally stable, still low, especially for prime age workers. But inflation is starting to rise as the tariff-a-palooza kicks in. Companies had stocked up on inventory at the beginning of the year when all the talk of tariffs started, but now they're starting to, and they've put off sort of passing along the cost to consumers as long as they possibly could, but now they're finding that they really have no other choice, so prices are starting to rise. And of course, trade policy uncertainty is leading many businesses to forestall major capital investments. We've been hearing sort of anecdotal reports of that. But we've also been hearing that some are saying, damn, this year is full speed ahead, and are just continuing as things as usual. And of course, something that you don't really hear too much about is that electricity costs are set to rise. Here in New York State, they'll be going up about 4 to 6% next year, and will be increasing, I think, for the next 3 or 4 years, they said, 4 to 6%. The reason for that is, all these AI centers that they're building, they're energy hogs, and that's creating more demand for electricity and energy, and which is increasing the price. And of course, the switch away from cheaper renewables to more expensive fossil fuels is also not helping the energy costs. And unfortunately, most of what we do as an industry involves electricity, unless we want to go back to using Gutenberg hand presses, which actually may not be a bad idea. But still, everyone keeps saying, oh, is there a recession coming? No sign of a recession as of yet, and hopefully that situation will continue. In terms of demographic trends, we're probably going to still see continued challenges finding and recruiting staff. But then there are two sides of the employment issue. Sure, there are production staff shortages, but since the recession, since the pandemic, we've certainly seen a lot more entrepreneurial business owners out there. And that's especially true in the franchises. I talked to a lot of sign franchise owners, for example, your Fast Signs and your Signoramas. And a lot of them are just really, they've left the corporate workforce. They don't want to work for the man anymore. So they like the idea of just being entrepreneurial and running their own business. And we've been seeing that since the pandemic throughout the economy, more entrepreneurial workers overall. I don't know if we're still calling it the Great Resignation, but I know that was the term people were bandying about in 2020, 2021. And that's certainly an opportunity for new print customers, because one of the things I also track is new business formation from the Census Bureau, and that really went through the roof in 2020 as people sort of used the pandemic sort of got in a lot of people's heads, just only got in mine, and you sort of think, well, do I really want to keep doing what I've been doing, and do I want to just sort of try to form my own business? And they're not people sitting in their bedrooms in their pajamas doing graphic design or blogging or something. It's, if you look at the categories, retail trade, it's professional services, it's even construction. And a lot of new businesses need the stuff that printers produce, whether it's signage or marketing collateral or other types of printing. A healthy business, new business formation is really good for the industry in terms of finding new customers. Some of the technological trends, obviously automation will become more necessary than ever, not just at the front end of the process, but throughout. Robots, cobots, mobots. Keypoint also had an article that also appeared on What They Think, I think last month, where one of their writers went to the Implant Printing and Mailing Association conference and did an INTERSAT survey there. Said, "Are you ready for robots?" And everyone was really enthusiastic about actually working alongside robots, and not just things like robotic arms for wide format printer board loading and things like that, but also humanoid robots and cobots, doing some of the grunt work in their plants. So it's a lot more receptive. They're a lot more receptive to robots than you would have thought a couple of years ago. And then as the costs come down, it might be an actual worthwhile investment for print businesses to invest in some kind of robotics. And of course, AI is here. It's a great tool for analyzing plant data, for doing design, getting some design ideas. But my suspicion is that, and this is already starting to happen, is that it's not really going to be a conscious implementation of AI. Print businesses aren't going to say, "Oh, we need to invest in AI." It's simply going to be, built into the software that they already use, kind of the way cloud computing was. It's like people don't say, "Oh, I'm going to go use a cloud software." It's like that's kind of the option now. So I think AI is pretty much going to be the same way. Sustainability. There's an increased emphasis on sustainability throughout the print supply chain, certainly especially in packaging. Label Expo Europe is going on now, and we get a ton of press releases from companies exhibiting at the Label Expo, and virtually all of them mention sustainability in one way or another. So everyone is really looking into be more sustainable in their practices. And the strict EU rules are coming, and some of them are already there, and they will be impacting U.S. packaging printers. Yes, Teresa.
How do you see that the regulations coming with extended producer responsibility impacting the industry in the near future and beyond?
It's certainly going to have an impact. I haven't looked at it closely. I know Carrie Sherburne has written about it extensively on What They Think. But certainly, if you do business with Europe, that's really a lot where all the action is, and certain states like California in particular. So you might think that, okay, I'm a print business in the U.S., so I don't really need to worry about these things. But if you do business in these other places that do have these regulations, you sort of need to sort of pay attention to them. And it doesn't make sense to have two different workflows for different places. So you're probably going to need to adapt one way or the other.
Okay. Okay. What type of time frame do our members need to be thinking about? They need to hurry and get on the bandwagon with EPR, or watch
I'm not quite
and
certain
wait?
where things stand now, but I would at least start investigating it sooner rather than later. Probably within 5 years, you're going to see a lot more implementation. So I would start thinking about it now, and then just see what their time frame for rolling all these regulations out is, and then just sort of adapt accordingly. But I certainly wouldn't put off looking into it.
Excellent. Thank you.
And of course, another technological trend is diversification, adding new products and services. And we found that we're not quite certain what that is. For some, it's textiles and soft signage. For some, it's packaging. For some, it's other kinds of complementary printing. And the great thing is that print these days isn't about just ink on paper. It's ink on just about everything. You go to shows like Printing United or the International Sign Expo. And print almost sounds like an exotic paper almost sounds like an exotic substrate where you're printing on mugs and water bottles and things like that. So if you're looking to diversify, certainly check out some of the exhibitors at Printing United and find out what the possibilities are. And of course, we're still bullish on embellishments. We haven't quite seen it turn up in the data yet, but we're gonna die on that hill. We think their embellishments do have a great deal of potential. Ultimately, the state of printing is a direct function of the demand for print. And as I said, print can be virtually any substrate, material, or object. Because since 2000, consolidating industry, we've seen the industry consolidate thanks to the replacement of print with electronic alternatives. That hasn't stopped, although it certainly has slowed down quite a bit. But new printing technologies have facilitated the ability to do these diversified applications. If you buy a flatbed wide format printer, sure, you can do boards, but you can also do things like corrugated packaging. Companies such as Canon, for example, have partnerships with some other companies that let full turnkey systems for doing corrugated packaging, industrial printing, promo items, and other types of materials as well. On the other side, as connectivity gets fast, true 5G, which someday is going to be here, but it certainly has the potential to erode demand for print even further as more people can do more things on their phones, which sort of takes away from interest in printed materials. And this is our rough forecast of where we see this. Again, this is NAICS 323. Doesn't take into account where printers may consider themselves. So by 2033, we're looking at generally a $76 billion industry. We're not going to be going through the roof, and we'll be slow decline. So that's where we see the industry going in the next 10 years or so. And that's my story, and I'm sticking to it. So if you have any further questions, by all means, ask away.
Excellent. So now is the time for our attendees to type either in the Q&A box or into the chat field questions that you have for Richard or any of the other panelists that are a part of the committee. I'll kind of start off and say, tariffs continue to have things in a bit of flux. No one knows quite what to expect. You hear a lot of, make America great, and it's going to make our economy stronger, and much work will come back to the States, and that's going to make for a richer economy. And then you have the opposite of that, which is tariffs cost everybody more money, and that's going to cause pricing to continue to escalate, and it will cost Americans more money. How does the print industry fit into that discussion?
It's essentially going to come down to how expensive are consumables and other materials. We started reshoring printing some years ago, so we really don't outsource that much printing. Maybe some of it might come back still, but I think most of where the printing industry is going, short run, on demand. I mean, that's the kind of thing that really doesn't lend itself to outsourcing anyway. So that's still all domestic. So maybe some of the long run printing might come back, but I don't think that's a major factor. The good thing about tariffs is that if we're lucky, it'll just be a one-time shock to the system. Prices go up, then they kind of stabilize, and then as long as they don't go up again, we kind of get used to it. And as long as wages don't rise accordingly, which is bad for workers, but kind of good for other people, then we should be okay. We can get through it. I think the biggest issue in terms of the tariffs is just the uncertainty. Businesses don't like uncertainty. Wall Street might like uncertainty, but economists certainly don't. And it's hard to really plan a business when you don't quite know what your costs are going to be, going forward. So I think that's probably the biggest challenge, rather than what the specific number is, especially when the number changes fairly regularly.
Good information. Very good. Can you talk a little bit about, kind of the constant pull from conventional printing equipment to more digital or inkjet click charge style? And there are advantages and disadvantages to both sides. Is there information you can share on where you see things going?
Certainly things are going a lot more digital, but at the same time, a lot of the offset press manufacturers are partnering with the digital print manufacturers. And Patrick Henry did a great webinar earlier this year and has written a number of articles for us on, integrating the digital with the offset so that you can sort of get the best of both worlds. You can do the long run stuff that offset is well suited for, as well as a lot more personalized short run stuff that digital can do. So I think it's going to be a hybrid process for a lot of things. But certainly there's a big drive, and we've been seeing this since the late 90s, really, is that, tapping into that market for short run printing, as things become as variable data printing and personalization, and you can sort of target things a lot more closely, that becomes a lot more effective. But certainly offset is not going anywhere. But I think they can all sort of live in some degree of harmony for a while. It just depends what you really want to produce and what market you find the most successful.
Right. How do you apply that same question to industry segments? Everybody recognizes that they may need to diversify. They can't have all their eggs in one basket. Where are the leaders in segments for diversification? Everybody wants to get into packaging, wants to get into labels, wants to get into wide format. What are your thoughts there?
I think it really just starts with whatever your customers want. And I've been advising this for years. Whether it's getting into wide format or this, you just find out what your customers need, and go from there. If they need short run packaging, for example, if they're doing, if they're trying to sell small items of, salsa, for example, at farmers markets, they don't need a million boxes. They just need short run packaging. Maybe they need promotional items like golf balls. They host a lot of events or things like that, or they need, signage and display graphics. So I think it really just, depends on what customers want. You can, install all this, packaging equipment, but if your customers have no demand for it, then you really haven't really bought the right stuff. So I think it starts with the customer, really.
Okay. We have a question. In an environment of raising overhead costs, where are companies turning to cover the cost increases, and to maintain or even increase profitability of their businesses?
Some are just biting the bullet and raising their own prices. Some are trying to cut costs as much as possible. I think we're still trying to wrestle with that because we can't raise prices that much. If you make coffee, certainly there's a built-in market for that, but people are always looking for reasons not to print something. So there is an upper limit to what you can charge for print. So I think we're still wrestling with that. I don't think there's any clear solution aside from either raising prices or finding other ways of cutting costs.
Excellent. Yeah, I think you're right. I see it kind of going both sides. No one wants to price themselves out by raising their prices, so they have to cut costs. So they're trying to control costs, and it's just that constant balance.
Yeah, I mean, if anybody wants to write in and say what they if how they're dealing with it, I would love to hear what other people are doing. I can, I just from the companies I talk to and the data I see, but I'm happy to hear if anybody is wrestling with this themselves and how they've solved the problem.
Yeah, certainly a discussion point there is as we talk about diversification and getting into other industries, not all of those pricing or cost control measures apply the same as they have to conventional printing of the past. So I'll use the example of wide format. Their materials come in large rolls that they have to sustain the cost of, and they can't apply the cost of the whole roll to the job with the smaller quantity. And to get the business, they now have more inventory on the shelf
Mhm.
that they may or may not use. And that's very different than ordering enough paper sheets to cover the cost of a print job, and then it's done.
Yeah.
Thoughts?
Yeah, that's certainly true. And especially when you're trying to get into these new areas. I mean, people who've been doing printing for decades and decades, yeah, they sort of got it down. They sort of know, okay, this is what paper costs, this is what ink costs, fine. But when you do get into those new areas, yeah, it's kind of a murky area. Eventually, you sort of figure it out. And strangely enough, I mean, software can actually come to the rescue in this respect. I mean, a lot of the systems out there now can do all these calculations for you. I hate to say that AI is going to solve all these problems, but that's one of the big selling points of AI is that it can answer those questions for you, or at least try to.
Right. At least give you something to think about that you might not have considered before.
Yeah, exactly.
Um, that mindset of AI could really help advance our society to do more grunt work with machines or software, and free up a lot of workers to do higher level thinking jobs, or it could really go the other way and impact a labor issue where our workers don't have jobs because the computers took over that. And I don't know that anybody has the answer, but there is
No,
certain
I mean that's been an issue that goes back to the 19th century. I mean, the original Luddites were because they were all these craftsmen were replaced by machines, and then we saw that again in the 60s. There was a big issue. In fact, there was even an episode of the original series of Star Trek based on this very issue of computers replacing Captain Kirk. So it's always been, whenever a new technology emerges, there's always the danger that it's going to replace people. At some point, it is going to start affecting all the people who were supposed to be getting better jobs. So I think we're still in a murky area. I'm vaguely positive and optimistic that the people who are replaced by AI will find better jobs. Somebody has to oversee the AI. It's still not sort of self-sustaining at the moment. But I'm, I don't think we're doomed just yet.
Excellent, excellent. Certainly, your report brought optimism, particularly for me. While we don't have double-digit projected revenue increases predicted, we still have positive growth. And of course, there's that inflation on the other side that's always taking away from the potential growth, but we are still moving in that direction. We have a very mature industry. Talk about how our industry compares to others that matured like ours and the predicted growth of the future.
We're certainly in better shape than farming.
Very sure.
I think I was comparing at one point our industry's demographics to the agriculture segments, and their unemployment is really high. It's hard to say. I think just taking unto ourselves, I think we're actually in really good shape as an industry. Obviously, the drastic changes in the macroeconomy can affect that. Certainly, the Great Recession back in 2010, sort of 2008, 2010, sort of really upended a lot of things. But I think we rebounded from that, and as some of us have said, we've kind of right-sized as an industry. Any industry sort of expands or contracts to deal with the level of demand for what that industry produces. And as long as demand for some kind of print is high, then I think the industry will grow along with it. And if demand for print, whatever that print is, declines, then the industry will decline accordingly. That's kind of the way any industry kind of works.
Mhm, mhm. You talked about the kind of the entrepreneurial spirit and the increase in individuals thinking about running their own shop instead of working for a corporation. Do you think that most of them were just planning to start off with their own personal investment, or you think most of that is going M&A direction?
I think the people who are entrepreneurial, that tends to be sort of a self-finance kind of thing. I mean, if you're working for Verizon and suddenly you want to, open a Cinerama franchise, I think that's probably going to be your own investment, or you'll get out capital outsourcing elsewhere. In terms of M&As, I mean, that's certainly one way that the diversification happens. A commercial printer wants to get into packaging or wide format. Well, the best way to do that is buy a company that produces wide format graphics or packaging, because then you've already got a built-in customer base, as well as the equipment itself. So I think that's where M&As can really serve a purpose.
Excellent. Um, when we talk about leveraging automation, with those very kind of self-funded entrepreneurial, our industry is really built on partnerships and sole proprietorships. Um, any recommendations on baby steps to start leveraging automation? Software is expensive, robots are expensive. What are your thoughts on?
Well, that's with anything. You don't want to jump right into it. I mean, it's baby steps, baby steps. So, talk with a software vendor. If you find out where your bottlenecks are in your business, and then find out, okay, how can I automate something to help solve that bottleneck? Is the bottleneck in pre-press? Is it in proofing? Is it in post-press? Find out where the sticking points are, and then it uses opportunities like Printing United, for example, which is coming up, to talk to software, right, or even hardware vendors. If you have digital printing equipment, a lot of them are in a more consultative mode than they used to be, so they can help solve some of these problems as well. Say, here's the software that we would recommend, or we have our own software that can help resolve some of these things. So it's just asking questions and not expecting to automate every process at once. You automate one thing at a time, see how that works, adjust accordingly, and then move on to the next thing. It's more of a journey than a destination, as they say.
Good point. Good point. Integration seems to be a big buzzword these days. Everybody wants every type of module to try and connect, whether it's estimating and management software, CRMs, or it's workflow softwares and pushing work through the shop, all the way down to integrating credit card processing and logistics software. Um, what's your thoughts on long-term time frame of integration? Is this coming faster than people are expecting and they need to really pay attention, or is this going to play out over a number of years?
Well, it's been going on for a number of years. So I think it really depends on what, an individual business is comfortable with doing. I mean, you can look at what the industry on average is doing, but the industry isn't an average. It's individual businesses that have their own internal dynamics and their own internal comfort levels. So I think if they're comfortable integrating all these things, then great. If they're a little bit reluctant or aren't quite sure where to begin, then they can go a little bit more slowly. Again, with the automation thing, it's like, okay, good. Baby steps, and just do it gradually rather than trying to integrate everything in one fell swoop.
Mm-hmm, mm-hmm. And then talk to us about the United States Postal Service. What's going on there? Helping, hurting the industry, controlling
Um,
costs?
it's interesting. I gave this presentation last December to the Printing and Associations of Georgia, and I was talking about all these advantages in direct mail, and everyone can give me these weird looks. And I was talking with someone afterwards, and apparently in Georgia, as well as a couple of other states, the Postal Service barely works. And I was really quite surprised by this. There were all these issues with facilities not processing the mail properly, so it's virtually impossible to send direct mail. So I had Patrick Henry look into it. And yeah, there are certain parts of the country where the Postal Service just does not function particularly well. I don't know how one solves that, but certainly that's a weak link in our chain. I mean, we really do rely on the Postal Service. So I think solving whatever problems the postal system has, it should be a paramount issue. Whether that'll happen or not, I don't know, but certainly fixing those problems has to be on top of people's minds.
Right. There's so much related to regulations and, just the laws in our country that dictate that you have to get certain information via mail, that it shocks me to hear you say in
Yeah,
Georgia it doesn't work very well.
yeah. It is
Crazy.
shocking. I was shocking to hear that. I had no idea that existed, but yeah, apparently it's a problem.
Excellent. Okay. Great discussion. Great discussion. Our
Yes.
attendees are still logged on. If you guys have questions, now's the time to type them in the chat or the Q&A. And I'm going to finish up by saying, if we have any of our committee co-chairs that want to chime in, you're welcome to do so. But Richard, give us kind of your final thought, your big picture outlook for
I
2020.
think this is a great time to be in the printing business. I mean, not just printing ink on paper, but certainly I encourage everyone to go to Printing United, and check out just all the things that you can print on. I mean, I mostly, as I said, I specialize in white format and display graphics, so I see a lot of all that really, really cool stuff. But I think even in commercial printing, I think there's a lot of interesting stuff going on. Embellishments certainly have the potential to help grow the interest in print. And I think one of the things, ironically, that has helped is the pandemic. I think that has driven a lot of interest in printed materials. Young people are buying more books. Direct mail, when you can get it, unless you're in Georgia, has also taken off since the pandemic. And I think people just like physical media. Everything is an app now, and I think people are just getting a little tired of being online all the time.
Great point and great feedback. When I think of that direct mail that comes in and sits on my counter versus all of the algorithms that are weeding out email or weeding out filtering online ads, and then just the fatigue of being online or the constant management of the hundreds of
Yeah.
emails. Certainly, I lean back towards, oh, I can look at that and set it down and come back to it and not feel as much fatigue. So there's certainly a balance there. The pendulum seems to be swinging back, and that's great news.
Yeah, exactly. Yeah, so if anybody has any further questions, I'm at richard@whattheythink.com. You're welcome to reach out to me directly if you have any questions or comments or insults.
Okay. Well, your information is great. We will share a PDF of your slides, as well as a link to the recording to both PIM and Mid-America members. I do not see any other questions or comments, but would just add that our next FEC Financial Executives Council is coming up in November, and it will be on our wage and benefit survey results where we talk about benefits and wages and where the industry is going. So I want you guys to save the date, November 19th at 11:30. We'll get the information out to you with a registration link so that you can all join us and we can kind of tackle that next step of how do we manage wages and costs and benefits. With it is the launch of a brand new online analytics tool that includes being able to use real-time queries to look at the benefit side, much like we did with wages last year. So Richard, I hope you'll join us for that.
Yeah, definitely.
As well as all of our attendees. Thank you for presenting. Thank you to our committee chairs for putting together some great content. We encourage the discussion to continue, and so reach out with additional questions that you might have. Thank you. Have a great afternoon, everyone.
Thank you.
Bye-bye.